In high seas or calm, both opportunity and risk lurk just below the surface. Answers require in-depth analysis. Welcome to BlackFin Group's Shark Cage podcast, where experts dip below the surface of important industry issues in search of hidden opportunities.
Good day, folks, and welcome to the Shark Cage, BlackFin's podcast series. My name is Kemph, President and CEO of BlackFin. I'll be your host today. To start, I want to thank our sponsors. First, a special shout out to BlackFin's preferred partners, LoanPass, Mortgage Flex, Constellation Mortgage Solutions, IE Mergent, Flowify, Cloud Virgo, and so many more. They're all doing great things for the industry, folks. And if you don't know them, I encourage you to check them out, learn more about them. They could be a valuable add to your tech stack. Second, a shameless plug for BlackFin, if you will. But we are really the industry's best resource for everything and anything as it relates to mortgage banking. Folks, nobody in the mortgage industry knows more about mortgage technology or has better expert resources than BlackFin. And it's all because of our deeply entrenched and trusted relationships in the mortgage banking industry over the last 30 plus years. So today, I'm really excited to have in the Shark Cage with me Andrew Weiss, partner at BlackFin Group, and Mike McChesney, principal at BlackFin, who both lead our technology consulting practice, helping community banks, credit unions, and IMBs nationwide with one, technology strategy as a whole. Two, reviewing their tech stacks, or three, selecting and implementing new technology. And just before I get into this very hot topic that we have today, artificial intelligence, which everybody's talking about everywhere, let me give you a little background on both of our guests today. I think this is really critical to underwrite their credibility as it relates to today's discussion. Andrew Weiss, as I mentioned, is a partner at BlackFin who runs our mortgage technology consulting practice with experience with Fortune 500 companies, startups, and consulting firms. He's led operational and technology teams ranging from 5 people to thousands. His particular strength is finding the balance between perfect and possible, really the leading edge of mortgage technology. He then adds value through his ability to understand the business needs and really motivate high-performing teams to deliver the best possible solution. Prior to BlackFin, Andrew previously was the Senior Vice President in Platform Strategy at Origins, an LOS developer owned by CU Direct. Before that, he was principal at Stratmore Group, leading technology practice, along with industry titan Len Ticky before his retirement. He was CIO at New Penn Financial, Senior Vice President of Strategy for Bank of America, where he was responsible for designing and managing tech strategy for billion-plus lenders, in addition to those roles. So Andrew started his career in mortgage in 1991 when he joined Fannie Mae. He served as Senior Vice President of Advanced Technology and led the team that ultimately developed and delivered Desktop Underwriter. So a lot of background there, obviously, that Andrew kind of knows what he's talking about when it comes to mortgage technology. Mike, who's with us today, has over 35 years of experience in mortgage banking. His experience spans all areas of origination, servicing, capital markets, technology. And it's where in the technology space that he's run lender tech strategy, and including the architecture, multi-year technology roadmaps and business cases and solution development and implementations. He's helped with process optimization at lenders. He's helped with acquisition, due diligence, and integration of that acquisition, the infrastructure management and program management. Mike served as CIO of top 10 mortgage lenders, where he was responsible for mortgage technology on all these different fronts. He was CIO at Planet Home Lending, CIO of IBM's mortgage outsourcing business, and was director at KPMG's consumer and mortgage lending practice. Mike, like myself, spent time back in the day at Dime Savings Bank in New York, where he actually worked on multiple projects, including large-scale servicing conversions and the development of the first mortgage loan origination automation platform. Good stuff, great background. Guys, it goes without saying that you're both the most intelligent and highly qualified mortgage technology experts that is in any room, not only understanding technology, but really analyzing the requirements of a technology to be successful in our industry while noting the realities of adoption in the new cutting edge tech space, like AI, like we're going to talk about today. So let's start with just the basics for our listeners. What is AI and how is it used in our industry today? Andrew, do you want to start us off today to give us some level of foundational understanding of AI and mortgage?
Sure, happy to do that. And Keith, thank you for that very nice intro. I appreciate it. So, like so many other buzzwords in technology in general, and certainly technology in the mortgage industry, AI has become to mean, if you ask 20 people what it means, you'll get 40 different answers, and each of them will be partly correct. So if you think about artificial intelligence in a broader sense, it can break down into a series of different kinds of technologies and uses. Some people would refer to rule-based systems like used for underwriting as artificial intelligence. True, not, I don't know, I'll leave that to the listener. Also, robotic processing. We have little robots that do different things based on what's expected. Document perfection. You're hearing this all over the place, where they're using AI to understand where certain data are on the documents, and how that data might compare to some other data somewhere else in the system. And deeper analytical functions like portfolio pricing, or some of the things that really require deep knowledge. It's interesting because today's world, we're talking a lot about Chat GPT and its various things. And that's a different kind of artificial intelligence. That's really around understanding how to absorb information and put it back out in English language terms. We're going to talk more about that later, but that's a particular subset, a class of artificial intelligence technology. And there's a huge range of them out there. Not to foreshadow too much of our later discussion, we're not really using AI very deeply in the mortgage industry today. We're using little bits and pieces of it, and we're going to talk a lot more about how we can use it and what that might be.
Oh, that's excellent. That was a great baseline, a great foundational understanding. I even learned something new from that. So thank you. I mean, we've been all over the board, and I loved your point about ask 20 different people, you get 40 different answers. It's so true. And, definitions just seem to take on a life of their own in this space. So, Mike, let's take this to the next level. Are lenders using or even researching things like machine learning or cognitive computing? I mean, these are all great buzzwords, and everywhere we turn in the industry, lenders and vendors want to beat their chest and say, "Look at us, we're innovative lenders. We're doing these things," and they use these buzzwords. But does the industry really research and understand these types of applications and strategies to really be able to benefit them? Are they really understanding them and then optimizing them? You want to help us get some better clarity there, Mike?
Yeah, sure. Thanks, Keith. But first, let me just say, I also really appreciate, Andrew, what you just said to kind of tee this up. I think in some respects, there are technologies that might be described as AI that in the mortgage industry, we've been somewhat leaders in. So, rules-based technology, Andrew, you were involved in the, development of desktop underwriter, right? So some of those technologies, some of the technologies around document recognition, data extraction, have had a lot of focus for some time within the mortgage industry. But I think the newer kind of emerging or now even becoming mainstream AI technologies can have broad applicability in the mortgage business, and some of those are actually fairly widely used today. So if you look at cognitive computing or things like ChatGPT, a lot of sales and marketing folks in our business are using those tools. Virtual agents, chat bots and other types of bots have been used in say, websites, servicing websites, origination websites for a number of years. And so some of those additional types of AI technology are already fairly widely used. I think there are also things like sentiment analysis, some types of technology that are used in either other industries or other areas of financial services. Call centers, for example, are looking at sentiment analysis so they can identify problem customers or problems that need to be escalated before they get to, sort of a point of no return. Text analytics, natural language processing is a type of technology that has potentially a huge benefit in our business. If you think about putting a natural language interface in front of, for example, an LOS, it could change the way those platforms are used, the way you have to train on those platforms, the way that borrowers and people who don't interact with that technology on a day-to-day basis can get the benefit that those solutions can provide. So I think that there's a lot of growing interest and research and even deployment of some of the other components of AI within the mortgage business. And I think that trend is really accelerating.
Yeah, so let me just add a little color to that, because
Go
I
ahead,
think
please
I absolutely agree with Mike's points all the way around. I'd like to sort of drill down a little bit on this thing called machine learning, which is really the basis for a lot of what you're seeing with text analytics and that kind of processing. And we should all recognize that what it does is it takes information that's out there in the past and analyzes it and pulls it forward. So if in the past, if you say stop, then there's a certain action that it's going to take based on that. And machine learning by its very nature is extremely powerful, can be extraordinarily beneficial, but is based on what has gone before. So there are applications where that makes a ton of sense and other applications where it doesn't, because you want to be able to do things that are different. A little story, before we actually released Desktop Underwriter, we went through a few, if you will, stillborn generations, and one of them was based on machine learning, much earlier technology, not nearly as capable as today. And one of the reasons that we didn't use it for underwriting was that it was very hard to change your policy. So if 1,000 people before had been underwritten in a certain way, then the 1,001st person would be underwritten that same way. And you couldn't actually change your policy on a dime without finding another 1,000 cases to actually shift it. And again, this isn't good or bad. It's about be very careful the application that you want to use the technology for, because it's great for certain kinds of things, such as responding to customers, as Mike was mentioning, but it isn't good for other things where you want to be able to enact a policy that you yourself as a lender or as an investor create.
And Andrew, just to build on that point, that's sort of a great lead into, predictive analytics, right? Which is not just assessing based on huge amounts of historical data, but is using some algorithms or some other means of predicting outcomes. And I think we've seen much more of that come into the mortgage business recently, and we've worked with some vendors who are doing some really fascinating things around the predictive side, which might have much higher value to people going forward than simply looking at and sort of digesting vast amounts of historical data.
Is what I'm hearing, we've kind of been using AI for a while. We're beyond 1.0 of AI in the mortgage space. That we're really trying to look at how we nurture and mature AI to use it at its more advanced levels to get to 2.0 or 3.0 versioning, if you will, of AI. Am I oversimplifying that, or did I hear that correctly?
Well, I think that's true to a certain extent, right? And it kind of comes back again to what Andrew said, at the outset. It's somewhat in the definition of, AI itself, right? So if you consider, rules-based technology to be a step down that path, then we've been using things like that for some period of time. I would argue that some of those technologies, and maybe a better example is some of the work that vendors have done over time and lenders have invested in over time around document perfection, document recognition, data extraction, right? Those are maybe types of AI, but relatively basic, I would argue, in comparison to the technology that is accelerating very rapidly today and is really probably more what most people think of when they hear the broad term AI.
Yeah, I absolutely agree with you, Mike. So I think it is interesting because in some ways the mortgage industry was an early adopter of technologies that could be used to make decisions, not just process transactions. You can even think of credit scores in this same kind of general model. Is that AI or not? Again, I'm not sure that's a very valuable conversation. Some would say yes, some would say no, and so be it. I think on the other hand, we also have, as an industry, sort of stuck to a basic model, which hasn't really changed a lot in the last 30 years.
Right.
So while we have really used it well in some ways, there are other ways that our business process has prevented the mortgage industry, perhaps, from really adopting some of the power that is available in this technology.
That's well said.
And I think that with some of the more recent advances in AI, we are now probably, lagging certainly other industries, but also particularly in financial services, maybe lagging the deployment of this technology in other areas of financial services.
I agree.
Connecting these dots, if I'm a lender, I may have my own definition of AI, and based on the 40 different definitions that you asked 20 different people. But the fact of the matter is, regardless of my definition of AI, I need to do a SWOT analysis around my AI within my own organization based on the technology stack that we have and the tools that we're currently using. Because some aren't going to be using enough of what's available today. Some layers of our tech stack are maximizing the use of AI use today. And so having some kind of AI assessment is going to be critical to really understanding where I can optimize and efficiency. Is that a fair statement?
I think it's a fair statement, but I think that my view would always be, rather than do an AI assessment, look at your overall technology portfolio, right? Technology should be viewed the same way investment portfolios should be, in my view. You should have, some things that are on the risky side of things, some things that are on the trailing edge, and a bunch in the middle. So you're prevented from really running into too much trouble based on having guessed wrong or the industry, either technology industry or mortgage industry, going a different way than you predicted. So if you think about AI in that overall sense of a lender's portfolio or an investor's portfolio or a servicer's portfolio, where does it fit in that portfolio, and are you maximizing the opportunity for benefit within your overall?
Oh, fair enough.
Yeah, and
Mike?
I would add, I think it goes back to the question you asked for any technology, which is, what's our objective and what problem are we trying to solve, right? And if we're trying to solve for efficiency, for example, that's where things like RPA have played a big role historically, and some of the newer AI technologies could play a role as well. And so if you think of, there's a lot of talk broadly around AI about jobs that are going to be eliminated and replaced, right? And do we think we're immune from that in the mortgage industry? There may be some roles in a mortgage lender that lend themselves to a specific objective around efficiency, for example, where you would say, does that role really need to exist? And are there better uses of my human expertise than doing post-closing, for example, right? And is post-closing a function that lends itself to being fully automated with some of these newer AI types of capabilities?
And
the other thing I would just add to that is that I think there are places, and post-closing is a great example. All of processing is a pretty good example, where there are more traditional technologies that in the industry we have not fully adopted that could also make it much more efficient. So do you need to go all the way to AI to get some of those efficiencies? Maybe yes, but certainly not always. We do an awful lot with documents, with paper, or paper in the form of electrons on a screen, when we should be playing with the underlying data itself, that data being quite available. Post-closing is a pretty good example of that. All of the data that was needed is there, but somehow we don't integrate all that information into a decision that says this loan is good for this investor. And so I think there's a lot of work that we can do beyond or before we get to AI. And sometimes skipping over those interim steps actually makes the implementation harder, not easier.
So that it's a natural next question that everybody in the industry asks is, what does this mean to the mortgage business? I mean, will it replace jobs? Whose jobs will it affect beyond post-closing? I mean, it sounds like to me, instead of needing 3, I might just need 1 or 1.5 employees to be able to help, depending on the size of my organization. But I might be able to optimize, performance and reduce, overall headcount, but not eliminate jobs based on the complexity of our industry and the careful tactfulness to integrate and leverage these technologies and how much time it's going to take. So ultimately, what does this mean to the mortgage business and jobs? Or should people be afraid?
I think that's a very interesting question, because regardless of the topic of AI, for example, people have talked about loan officers as a dying breed for a long time, and many in the industry have wanted to sort of kill that model because of the compensation costs and lots of reasons. But I think the mortgage business is a personal business and a relationship business, and particularly with first-time home buyers and education. And while there are a lot of tools that can help accelerate the education, people are comfortable for a transaction like this dealing with people. So I think there are arguments on both sides about the impact that it might have on a role like a loan officer, for example, or on a role like an underwriter. So I think there's no clear-cut answer to that today. I think that's a question that's being asked more broadly around AI, and I think therefore it's a question that we need to consider in the context of our business as well. And even where it seems like it might not have the kind of impact we think it's going to have elsewhere, maybe that's just a kind of a willful denial type of position. And I can say honestly, I'm not sure where I come out on that question today, but I think it's certainly a fundamental question that we have to ask in the industry.
Yeah, I totally agree with you, Mike. The other thing I would add to that is that it may allow for more stratification, if you will. So I agree. People have been talking about the demise of the loan officer for as long as I've been in this business, and it hasn't gone away. On the other hand, while a first-time home buyer might need a lot of hand-holding and want that personal touch and need that education, and that really only a human's going to fully provide, someone who's on their fifth refi because they're older and they don't need that. And so maybe these advanced technologies can actually make that transaction faster, easier, simpler. And so when I was talking about stratification, I'm looking at really dividing up based on customer need, based on that borrower need proclivity, their understanding, rather than on our industry's view that you do or don't need a loan officer. And so I think taking advantage of some of those opportunities is certainly out there.
Yeah, and I think to that point, these tools, like all technology, could help us allow our best people, experts, to do the things that they do best and solve the problems that only they can solve, right? Rather than having underwriters collect and review, tons and tons of documentation, have them figuring out how deals can be done, right? And the same thing with loan officers. So it's really a way to let people do what they do best and take the rest of it that can be done through automation with these tools and let that happen.
I agree. The other area I think where there's a lot of opportunity is in the targeting side of things. Yeah. It's easy to talk about sort of once a loan officer has a prospect on the line, what could happen. But what about before they get to that loan officer or to the virtual loan officer? I think that's an area where sort of big data and AI to help analyze that big data and make those connections is certainly something you're seeing in other industries. Not just financial service industries, but any retail kind of industry. Take Amazon, take Facebook, Marketplace, take whatever. I think those are things that we can benefit from as an industry.
Nice.
Yeah, absolutely.
That's good. And I mean, hey guys, let's look at it. The turn time, what is it? The average, I don't know what the average is today. It's probably
46 days for a purchase, which is insane in my view.
So there's a lot of room
at a cost of almost $13,000.
Right, exactly. So you guys both jumped to exactly where I was going, which is there's a lot of room to improve. And all of that trickles down to benefits and lower costs, operating costs for organizations. So that's tremendous. So let me transition to another question and just kind of piggyback off of that. I love the perspective that you gave on kind of, what the expectation should be around AI and what it means in the mortgage business. But as an industry compared to other industries, we're behind in the overall use of technology in so many ways. Now, granted, what we do is one of the most sophisticated transactions in the world. I mean, it takes more data points to complete a mortgage loan transaction for $150,000 than any other transaction in the world. So, I don't take this comment lightly that we're behind overall use of technology. So will AI, in terms of our discussion today, dominantly generative retrained transformer or GPT, will these things have deep impact on our industry? Today or is it more tomorrow? And we still need to figure out what our definition is in order to really optimize those particular advanced tools.
Yeah,
Andrew, you want to start by providing us some color there?
Yeah, my view is that the GPT that is so prevalent today that everyone's talking about is not going to be a huge game changer. I think it has benefit around the edges, certainly, call center stuff. I mean, I'm not saying there's no use for it. I just don't think it's going to fundamentally change our industry. I do think that as we get deeper into more analytics, particularly on the investor side, who are already doing a ton of analytics, but that's where you can optimize around a basis point here, a basis point there, and that could have some really fundamental benefits in terms of pricing and how that price gets back to the ultimate consumer as well. So I think it's not that there is an opportunity, but I don't see it being revolutionary tomorrow.
Mike, any
Yeah,
additional perspective?
I think I would certainly agree with that. And I think, a lot of the, I'll call it chat GPT craze is sort of, one-on-one. How do I have a conversation, or how do I use that as a tool to help me in a conversation, as opposed to, tools like predictive analytics that can be used in how you manage a servicing portfolio, right? How you do analytics around valuation, and how the valuation world is rapidly changing, potentially as a result of some of the predictive capabilities that are getting a lot of focus, and I think investment today.
Yeah. Okay. So speaking of investment, that always, springboards into the conversation around compliance and risk. So, what compliance and risk concerns do you have about accelerating the use of AI in mortgage? I mean, compliance can make or break a lender, and so we've got to make sure that there's some curbs, or there's some guardrails in place around AI to reduce our exposure from a compliance and risk standpoint. So, Mike, you want to tackle this question, or at least start,
Yeah,
with your
sure.
thoughts there?
Sure, Keith. And I think this is probably one of the biggest unknown areas, right, of the impact of these technologies as they're being developed and accelerated very rapidly. So, things like bias risk in algorithms, right, or statistical validity, right, of models and of data. I think we have to be concerned about things like deepfakes, and where some of these tools are simply wrong, right? There was a story recently about an attorney who submitted a brief written by Chat GPT that cited a number of cases that were completely fictional. And so, I think there are risks around that. People look at AI as a way to prevent fraud, but I think there's a real risk of AI introducing fraud. And so I think, this also becomes part of the broader conversation about the risk of AI generally, right? There's discussion about how these tools need to be regulated. That regulation will certainly have an effect on how we can use these in the industry. And so I think there are certainly some warning signals, some caution signals that we need to pay attention to, and that regulators will certainly be paying attention to as these more advanced capabilities become more widely deployed.
Yeah, not only do I agree with everything you said, I will sort of back it up with one statement, which is the lender is still going to be responsible for the outcome of the technology they use.
Right.
And so if you go into how you use these technologies with that in mind, then Mike's point about can be used for good or for evil, summarizing, then I think you need to be really careful to make sure you put the right guardrails around it so that it can only be used for good.
Well said, Andrew. That just summarized it really perfectly. I mean, I know a number of the consulting engagements, that I'd been involved in. The vendor always wanted to look back and say, well, the vendor's responsible for it. And I'm like, hey, at the end of the day, you're liable for the loan. Compliance and risk, it's all on your shoulders. They're just giving you the tools. You got to define, how you want that augmented based on, your organization and your risk and tolerance levels, in your interpretation of compliance. Boy, it's a great reminder to all that, regardless of where these tools come from or what they offer, you ultimately own the responsibility and how you interpret that and the utilization of it. So, guys, I think we could talk for another hour or two on this discussion. I mean, this is incredibly insightful, but any closing comments or thoughts or words of advice that you might have when it comes to, lenders thinking about AI and their adoption of it?
I guess my advice would be the same advice I give to lenders on any technology is make sure you understand your goals Make sure you understand the inherent risks. Don't be afraid to move ahead, but make sure you're doing it in a way where you're not betting the farm on speculative things, but yet you are willing to take steps forward where it makes sense, which is an interesting balance, right? It's not all, it's Goldilocks, right? Too hot, too cold. You got to get it in the middle.
These technologies are here. They're advancing very, very rapidly. They're being widely used in all aspects of people's daily lives. And we've touched on they're being widely used across other industries, and they will increasingly be used in the mortgage business. And so I think that's really exciting. But I think that there's caution that you need to apply as you deploy these for some of the reasons we just mentioned. But the power of what these capabilities can deliver to really transform our business and change the borrower experience and make the process more efficient, right? There's a lot of power there. If we can figure out how to harness it properly, it's really very exciting for what it can mean for our industry.
What a great exclamation point on this whole conversation, Mike. Great way to summarize it. Great closing points for people to have in mind moving forward. This has been absolutely great insights around AI, really helping set the stage and framework for healthy approach to AI as organizations think about where they're at and then where they need to go to leverage what's out there. Thank you, Mike and Andrew. Kind of feel like it was one of the first real meaningful and really frank conversations I've had or heard around AI in the mortgage industry. So great insights, good stuff. Folks, if you want to talk to Andrew or Mike about your AI strategy or tech stack strategy overall, email us at info@blackfin-group.com. That's info@blackfin-group.com. Mike and Andrew, I want to thank you both for jumping into the Shark Cage with me today and talking about AI. Until next time, folks, this has been another exciting episode in the Shark Cage. Thanks so much for joining us. Have a good day.
Thank you for joining us in the Shark Cage. To be a guest on a future episode, send an email to info@blackfin-group.com. To find out more about the show or the information provided in this episode, visit BlackFin Group online at www.blackfin-group.com.